What's going on, AMC family, retail family, 8 family, all you players, traders, and haters out there? Welcome back to the channel. It's your boy D, and this is D's Daily DD. Let's kick it off by saying I'm not a financial advisor. This is not financial advice. Don't ever take it for financial advice. Take it for educational and entertainment purposes only. The market today, the casino was open again, and as you can see, it was very volatile. If you were paying attention to, I was paying attention to a lot of different things today, a lot of different stocks, kind of to get what the vibes or the feel is going to be for the week. As always, I hope you guys had a great weekend, watched some football, right? Got to relax, kick it with some family, friends, or whatever, and got to take some brain power away from the market for a little bit. But yeah, it's back open, and I want to give you my thoughts, my opinions for this coming week and what I think is about to happen. But there's a lot going on. Everybody that has subscribed recently, I appreciate y'all. I love y'all. Whether you like me or hate me or whatever, don't like me, love me, whatever, I don't really care. I mean, I like the people that like me, of course, but if you're coming in here to try to hate or whatever, like, it's okay. It's not gonna affect me. It's not gonna bother me, because I want to hear the other side too. I'm always for AMC, for the retail investors, and the especially the new people. I always try to help them with education, and experience also goes a long way. But I'm no expert. I'm always learning. I'm always trying to improve myself and learn from my mistakes in the past too. So yeah, I always try to pass on that knowledge to my subscribers, and that's why I appreciate y'all. So yeah, guys, I want to jump into some things that I want to talk about. Let's do it like this. So I'm going to try to keep it real short and sweet. There's not too much to talk about today, but there's three things that I do want to talk about, which is going to be the FTD problems that I see going on, the bad news that keeps coming for big money and the big hedge funds and the shorts and so on, and then the waiting game that we're in right now, because bear markets don't last forever. And I'm going to give you a little bit of data points for all three of these so we can do today's video and talk about some things that are happening, right? So just to be aware, pay attention. This coming Wednesday is going to be, the rate hike, and it's most likely going to be right here a third straight 75 basis point increase to their benchmark policy rate. The discussions at Wednesday at 2 p.m. Wall Street also take its cue from Jerome Powell's speech in the aftermath of the event, along with economic projections of U.S. central bank members in the latest dot plot showing each official's forecast of the central bank's key term short interest rate. So just to give you a heads up on that, that was just, you got to know that that's happening this week. But let's just first get into the FTD problem and what's going on with the borrow fee. So there is a reason why there's a high borrow fee on AMC. Because the shares are scarce, and when short sellers can't find the shares to short, in my opinion, then they naked short sell the stock. All right, that's just what I believe. But this article came out, which I really liked. It's from September 16th from Tremendous. Over 43 million ape shares failed to deliver in market chaos. And I like there was some good points in here. The market in AMC Holdings preferred equity ape shares is a mess. And I agree with that, right? Fails to deliver. FTDs peaked at over 43 million shares last month, according to a report just out from the SEC. These new shares were issued last month by AMC and began trading on August 22nd. FTDs peaked at 43 million shares 2 days later. This represents over 8% of all shares outstanding, and it all happened in 3 days. Just take into account that data point. I really, think that's a big number there. FTDs like this is beyond the mix-up. It's a total market meltdown. FTDs remain elevated through the end of August, reporting the period settled at 5 million on August 31st. But we did not see the price rise. That's why, how did they cover these 40 some million or 30 some million shares without seeing any price action in the charts? All we saw was, the price go down. But when you cover, when you buy, because that's what they should be doing, right? Technically, then you should see a price increase. But again, I think it's all about the T plus 35 when it comes to FTDs, and still paying attention to, the T plus 35 date, which starts on the 28th of this month. So that was what I really liked, right? When we got the FTD report, the clock was already taken for the T plus 35 because it starts from the date that the initial problem started. and the clock was ticking, right? So even though the FTD info was late, they have 35 calendar days, and I'll show you the proof right now. But let's compare the FTDs on August 24th in Ape shares with those some of the biggest stocks in the market. And you have Amazon, and when they're doing this, they're just talking about that day, August 24th. I went to verify it. Amazon. Let's go to Amazon. Sorry, this is Ape, but every single day, right? You see the red. That means extremely high FTDs on Amazon. Uh, they do have some, right, where it's 200,000, 400,000, 500,000, but the specific date was the 24th, and on the 24th there's zero, literally zero. And Amazon has a float of like 10 billion shares, so it's very interesting. That's what I kind of look at, where Amazon has 10 billion shares and they can still, transact every single transaction and not fail to deliver. And then you have Ape stock that only has 516 million shares, but they ended up, messing up, failing to deliver, whatever you want to call it. A lot of the shares, a lot, like an alarming amount, right? You go to Google, and this is to compare, right? Because they gave you the comparison. Apple right there, 395,000 on that day. Google only 113 on that day. And here's the proof, right? 113. Minimal, very minimal. Then you got Microsoft, which I believe had zero as well. Yeah, on the 24th, zero FTDs, zero. They can transact and find every share. And then Tesla, which is also a highly shorted stock. It always is, right? Has been in the past. So on the 24th, they only had 530. So that's a good comparison. They're not all direct competitors or nothing, but I'm looking at the FTD data that, like, why is there so many problems with the the Ape shares that are, kind of AMC shares, but they're owned by AMC, right? At the end of the day. So their Ape shares have dramatically more FTDs than other much larger stocks. FTDs can sometimes happen for benign reasons like clerical error, but when there's a sustained pattern of massive trade failures, it's often indicating that there's some naked short selling. We've been talking about this for a while. This is generally illegal practice that involves selling short shares without borrowing them first. It's a powerful way to push a stock price down. And the reason it says it is illegal, like generally illegal, is because it kind of is, but you have market makers that are actually allowed to naked short sell, right? And that's not fair to me, in my opinion. That's just, not fair, which is why they kind of abuse that power. And yeah, so there was the FTD info. The second thing was, let's see, bad news keeps coming for the big money. Now, that's why, like, for me, when I hear, like, I think it's true when people say it doesn't cost me anything to hold, right? I don't have to pay that cost to borrow fee to borrow the shares. I pay for the shares and I hold them, and it doesn't cost me, an extra fee on the side to do it. And so that's why I believe Ape will have a run soon because of the FTDs. The firm has up to 35 calendar days following the trade date to close out the failure to deliver position by purchasing securities of like kind and quantity. So that's the only piece that I see as a loophole for these firms that have not delivered or created the FTDs. They have to purchase securities of like kind and quantity. So that's the only loophole, right? If they're not going to purchase the Ape shares, then they're going to go and try and find, other like kind and quantity of those Ape shares. But what I keep in mind is that Ape shares are a preferred equity. So it should be a lot harder to find them because it's not a common stock. AMC is a common stock. So the bad news, right, keeps coming for them. There's all this bad news. Look, stock market news. Stock markets face deteriorating outlook and returns worldwide. Gloom casts a pale over the stock market. Home builder stocks rise after key blank double upgrade. Okay. Stock market news. Let's see. Stocks fall after FedEx warns of global recession. So you see all this bad news coming out. It's not looking good for the shorts, in my opinion, right? Because their whole world is kind of crumbling around them, and when they have these little pockets where they can reach for liquidity or more money to cover or hold their short positions, I think that's how they do it. But again, look at this. Autonomy Capital offers investors a chance to exit fund at May value. Unusual move follows macro hedge fund failing nearly 30% this year after the market rollout. So because they're not doing good. And then again, I think it's just a waiting game, okay? Because bear markets do not last forever. Remember when AMC was pumping last year, there was a lot of green. It was a bull market. So in my opinion, when I analyze this, right, whenever we switch back and we get back to a bull market, which I can't tell you when that's going to be, but eventually it will happen. It's not like AMC is just going to continue to go down, right? Because the overall trend is how stocks kind of move, right? Whether it's a bear market going down or a bull market going up. But here's just some stats, and I hate Motley Fool, the Motley Tools, whatever you want to call them. But it's just giving you some data points. The early 2000 bear market took 929 days. The second longest bear market started in 1973. It took 630 days. The 80s bear market took about 2 years. And the smallest one, the shortest bear market was about 33 days. Now, the average is usually 388 days for a bear market. That's the average. You know, in my opinion, the bear market started back in like November, December of last year. That's when I saw everything start to move down. So it's almost been a year. All right. So I just wanted to give you these data points. And then as we go here, I agree with a lot of the stuff. Here's what AMC Bigums is saying. What this tells me is the brokers is that just through hypothecation, they have loaned out 43 million more, if 43 million more shares than the float. This doesn't count for international apes, and it doesn't count market makers exemptions. Is the CNS program, family offices, clearing options, and it's just the brokers. They're trying to wait us out. They're hoping the living conditions and inflation will force us to sell out the stock. We are seeing this through no matter what. And I'm here to stay. Like I said, I'm holding. The charts don't scare me to go ahead and leave and sell. On my ape chart, I love it. It's ready to go parabolic soon. Mofo's still shorting crazy with high FTDs piling up. They're about to get burnt. And then in Europe and other parts of the world, they're still not allowing people to buy the ape shares because it looks like they know that there's no more and they don't want to be involved in all this. And right here, this guy says right here, right, talk to a friend in Europe, and the reason they can't buy ape is because their banks do not want them to be on the hook for supplying a share they say does not exist. Their bank says the first 518 million has been sold, and it's likely being held by the MC shareholders. The rest are not real. And then the last thing I'm gonna leave you with, that's all I really got for today, is gonna be this chart. All right, the AMC chart. And the reason I have this is because I'm paying attention to the cycle, and I believe we're coming to the end of the whole cycle. But if you see here, you have this little falling wedge, and once we can break out of it, because this is coming to an end, I expect to see some moves based on this pattern. Right, let me take you back here to kind of show you. Right here, this was the June run up. After the cycle, right, it goes through the cycle, comes to the end of the pattern, and then you see the breakout and then a dip before the rip. And that's the same little falling wedge that you would expect. So this is why I expect a move similar with AMC here. All right, nothing's guaranteed. Make your own financial decisions. But I'm still holding because I can see us, breaking out and starting this cycle all over again. I'm not going to give you the price target or nothing. I'm just going to give you my idea of the move and what could potentially be happening here soon. But yeah, I'm expecting to see this breakout. All right, because the cycle that I'm talking about, this whole thing, the cycle is coming to an end. The same way that eventually, right, it came to an end, and then they had to, let some pressure out. So I think it's not going to be bar for bar, but that's just what I'm looking at. And that's all I really got for you guys today. It's just a waiting game, like I said. We could pull this back up, but it's just real simple. So the FTD problems, the T+35, the bad news that keeps coming for the hedgies, and the waiting game. The bear market's not going to last forever, and the apes are here to stay, and we're not leaving. We've already proven that. So again, thanks for stopping by. There's the information I got for you guys. So I hope to catch you in tomorrow's video. Peace out.